All right, hello everybody. Now recording, just in case everybody wanted to know. But getting rolling here on a day trading kind of session. The big thing I wanted to cover today, at least up front, is um, really like the main thing of identifying pivot points. So pivot points for entries and exits, and then I also we can talk about some invalidation. But for right now, just wanted to do some sort of, kind of like a live session here. Now, before I do this, I don't need to, or I don't necessarily want you guys to think up front that like my method is the best method. Everybody's got a method. And I just want to be clear that you shouldn't have to change your method. It's just you can use other tools in combination with your method in order to actually like be able to take advantage of good setups. Excuse me. So right away, my screen here, it depends on what you guys like. So typically how I do this is like, by the way, I'm going to focus on the NASDAQ. I'll be flipping probably between QQQ and the NAS 100, which is really just like your CFD contract, but I find it's got the continuous sort of price for NASDAQ and nothing's delayed. All right, so 15 minutes is good, but really what I like to do before the day starts is kind of look at where we are for here. Let me clear out all this stuff here because we're gonna have to redraw it anyways. Kind of look at where we are, and also kind of look at some of the other different tickers. So NASDAQ didn't really make a new low yet. Here, I'll clear all this stuff out. So NASDAQ didn't really make a new low out of this kind of pattern here. This purple line is the 50 DMA. This is the 21 DMA, and this is the 200. So really what you're looking for, in my opinion, is good bounce points, or like typically reliable bounce points, where if you're over like a multiple day kind of horizon, you'll get these sort of pivots here. So you can kind of see like an indecision candle right now. We still got about an hour left here, but when we're looking at this, you still want to kind of go from the top down and do like your daily view, and then go down to your hourly. So the daily kind of looks like, it's still kind of holding ground here. I'm going to be drawing these fibs about 500 times a second here as we talk. It's just a measurement tool. And what I wanted to stress about it is that Fibonacci ratios are very important for algorithms. They're very important just for trading in general. Every system I feel like should at least have some sort of Fibonacci ratios baked into it somehow, some way, or at least you should be aware of what they do. Typically, they're pivot points or their retracement targets, and also in combination with, excuse me again, also in combination with some other pieces. Now, a lot of you guys hear me talk about waves. Waves are not exactly it's kind of the eye of the beholder, but once you've been doing this long enough, you kind of just use it. And it's I highly recommend. I have two books that are free. One of them's from one of my mentors, Robert Ballin. It's a great book. It's on he's got lots of like good corrective patterns and stuff to study. But the key I think to being a successful day trader is knowing when to stop. If you're down, let's say 2 or 3 trades in a day, and you kind of like nuked your profits that you made earlier in the morning, just stop. It's okay. You don't have to suffer from ABT. Always be trading. And I always found too that when you have large position sizes, you really sweat about it. You get kind of bent out of shape, especially if it doesn't go your way, and you're afraid to leave the computer. That means your position size is too large. So I do think that there are several things obviously to make you more of a successful day trader, but the things that I think are truly important are position size, the amount of time you're in a trade, when to take a loss, when to let it run, that kind of thing. And those last two things really do come with experience, but hopefully this can help a little bit. So during the day, obviously there's a lot more action, but if you're looking at, again, I want to stay on the NASDAQ, but if you're looking at it from like a top down, you can kind of see here that this pattern really does look like, it looks like one of these kind of ending or expanding diagonals, or there's a couple different names for these things, but the names don't really make that much of a difference. I guess it's more about it's more about like having an eye for what these patterns could potentially turn into. So when you're looking at stuff like this, when you're trying to day trade, you're kind of thinking, at least I'm thinking right now, we have an upward bias, at least for the next couple days, maybe into the end of the week. We might see a slightly lower low yet. And why I think that is because, and this is the analysis you should do probably like in the morning. But I highly recommend, I can't tell you what to do, but I highly recommend not trading in the first hour of the market because I've seen, and that's kind of why I wait to post sometimes, is because we could see big reversals. Like we could see like a reversal during the day, but usually what is it? The stats like 72% or whatever of all sessions don't make a new high or a new low within the first 30 minutes of the day, something like that. I'll find it. Don't even forget. But anyways, before I keep chatting here, I would just want to make sure that we kind of understand like the higher level thing. So there's a scenario here where we could see a dip back down into close, but then I think that sets up tomorrow for or at least the end of the week, something where you'll probably see some more buying. Now the invalidation though for that, so Jake, you had said, or you had asked about invalidation. Typically what you would want to do is you want to set like alerts or stops. So let's say you have added a bunch of longs. You could set a stop for, let's say maybe half the position, all the position. It's really up to you in your trading style. But anytime you see like a major fib level that's been breached, so it's something kind of like this, where you see it here. Let me go down to the smaller level. So once you see like a major fib level, you can kind of see it's got like two tests here, and then the bulls buy it up. But normally, once you see pierce of this level, you'll typically see the next one visited or at least tested. So that's kind of why I'm thinking we might see that here. So if I start looking at how these patterns are playing out, so now that we've got kind of like the macro context here, normally I kind of refine, well, I guess I would say like I kind of draw my fib ratios and I try to get some extra context. So what we're going to do here is we're just going to add these lines for sort of like I guess I would call them like a bifurcation level where it's bullish above, bearish below. And that's hopefully in an attempt to keep it easier to understand. Now with this pattern here, there's a couple, well, before I draw the fibs and stuff here, let me do a half hour. So you can kind of see just off to the right here as this is clicking through, it does kind of look like a bull flag. And as you're kind of looking at this, there's a couple different patterns. One is called like a diamond. Sometimes it's called diamond top, diamond reversal, something like that. It doesn't really matter to me, but you can kind of see that there's sort of like a weakish, kind of diamond pattern here. Those, I do see those more often these days. There's also another couple of things we could try here, where you see, so like before I say, I do think this is actually a pretty good day to do this because there's no like bullish or bearish conviction, but the bears have definitely kept their foot on any price action. So it's kind of like it's a good day to talk through the different scenarios and typically what you look for. So like right now, I don't really think any entry is really good, whether it's going long or short. I do think that long has a bias going into at least like the last 10 minutes of the day. So if I was going to take a trade here, I would go long, and that's just because of this. This drawing here. Typically, you could see something like this. Sorry, I got all this stuff popping up on my screen. I have friends that are unemployed that like to play video games during the day. I'll make fun of them later. Anyways, so as this is kind of cooking, we'll just leave this off to the right. But again, like I do think that there's some sort of like a long bias here. You can definitely see there's a lot of sell delta. So that's one where you definitely would want to have a stop. And the stop in this case, I would probably put it like below the pattern. So if you, or sorry, like below the last trend line. And I guess it's really more about like like, hold on one second. I want to make sure I can say this right. So like the longer term pattern for the next, let's say, hour could potentially hit something like this. I actually don't think you'll get something like you'll get a full extension, full A equals C. Really what you're looking for an entry is when it pulls back down here, and if it survives this test, then that's when you would want to add some longs. But you don't really necessarily want to bet the whole farm on it, because again, we have a ton of sell delta here. So the caution is that we have like you enter in a bunch of longs, and here we go, like they're pulling it down. You're gonna be in a bad spot if you get stopped out just right away. Also, I found that if you have stops that are too tight, you can also have the right trade, just the wrong level of, you're a little too conservative with your stops. Sometimes it doesn't exactly like touch the line, but I would say like on higher time frames it does. Here, let me zoom in. Let me get this out of here too. So what I use a lot is volume. So volume speaks, volumes, I guess you could say. I'm sure my wife is laughing at me over there. She's heard all these terrible jokes. But when it comes to these sort of patterns here, typically what you'll see is like a retrace back to where it broke out, or at least like, if it heads a little lower, you'll see a retrace there. And this is also kind of what I call like pattern expansion. So you could, I guess, technically, redraw the lines up here. And it doesn't really help when you draw the lines, or like when you just keep moving them. You got to have some sort of conviction at some point. So typically, I think about it like I think about day trading like a if-then statement. So it's like if price does not pierce this level, then it's a short. If you know what I mean. So it's like, I think that you see, both legs I do like a lot. This is a higher probability pattern, I think, of success. I mean, you can still see, again, like you can still see some top wicks and stuff. So it's not exactly like a very bullish kind of day, but you want to kind of gauge momentum with like the 1 minute charts. Everybody kind of laughs at me for this, but I always have a 1 second chart up for like the NASDAQ. And the reason is because you can gauge like buyer or seller enthusiasm. Now I want to just caveat here that this is not exactly like, you don't have to follow this. It's just another tool in the belt. So you can kind of see here, there really is like a pretty good struggle here between buyers and sellers. Like the buyers want to push it past the VWAP, but they keep getting rejected. And you can kind of see here that you've got these anytime you test this VWAP, the bulls haven't been able to really pierce it. But you can see there's been a decent amount of accumulation in this area, but it's just not really looking like a solid entry at this time. Again, I would probably, like, if I was actually like long in this trade, I would probably set a break even order, or maybe like 1 point above to pay for the trading cost, something like that. But I mean, we could still probably see something like this as it slowly grinds up, and I think you'll probably see it. But the next possible thing here we could see is more of this development for the flag. I do think that again, if you took a long, what I'm looking for, like what you should be looking for, are like common reversal patterns, like head and shoulders, something like this. And again, like today's discussion is more about like identifying pivot points and how not to get thrashed when when you're day trading and stuff. But common reversal patterns, double bottoms, double tops, triple tops, that kind of stuff. There's a lot of there's really like, I think 3 bullish things in this entire, structure here from the day. One is that first diamond, that diamond shape I showed you over here. The second one is now that we've got this flag here, I do think you'll probably see an effort from the bulls to try to get over the VWAP and keep pushing it higher. And I mean, I'm sure you guys have seen in the past that once they break out of a certain level, they really hit the gas, and you'll be able to see that on the 1 second charts here. So they're probably going to go for another attempt here, but for now, anyways, I guess before I move on to the other thing, I want to say that the third piece of what kind of makes this look like a bullish pattern is you have this this potential for another leg down. So again, with these bull flags, you can kind of see. Let's get a little cluttered here, but yeah. So this is good. If you're in a long trade right now, I would probably add. So there you go. You can kind of see the you got some seller resistance here. There you go. So now you can see that this flag pattern is really starting to play out, and you can kind of make the assumption here that this back test of this line did hold. So now that it's resumed its march higher, we can start redrawing some lines. We can start invalidating some scenarios. So we probably won't see a head and shoulders, inverse head and shoulders. So we can get that junk out of there. And now that we have this breakout here, we really just want to see like how far it goes. So now we can kind of we can get rid of some of these trend lines because we don't really need them right now. Also, we'll just get rid of that because we kind of know it's going to go up. Now, once you've been able to capitalize on the breakout, what you want to do is you want to measure the extension or their possible extensions. And this is where wave theory kind of blends with, like you could do a trailing stop. Oops, sorry, need that. You could do trailing stop. You could do all sorts of fun stuff. But if you're nervous to keep holding, especially on a day where you have some decent sell delta, that's all right. It's to just take a little bit of profit. A couple $100 a day, is 60 grand a year. Well, depends on how many hundreds, but but still, if you really wanted to try to capitalize on a move like this, you could take profit on let's say half your position, or you could leave a runner. Right? I mean, I always encourage, again, I can't tell you what to do, but I always encourage leaving a runner when you have something like this, because you have a couple things going for you. At the end of the day, you've got the last hour, you've got power hour, and really, you think about the dynamic between bulls and bears. The dynamic here is sort of like, you want to make sure that, actually, hold on, I see something here. Sorry, before I say my make sure crap here, I also want to caution because, again, end of day, buyers and sellers are kind of matched right now. So this extension level here, since we're in a corrective zone, blends with Elliott Wave and near field levels and stuff. And typically you'll see a tap here, but I would take profits here just because it's you're starting to see stuff like this where you can see real effort, enthusiasm. So again, like if you're day trading, quick in, quick out, right? So now that you see that this is rejecting here, hopefully you're able to pivot fast, because it's kind of probably right back where you would have entered or gotten close to. Now it kind of looks like after that rejected here, normally if you're going to see a breakout and have it continue, then you're really going to want to see not this. So in my opinion, we're still consolidating, and we probably will until end of day. It is possible though, you could see an extension. Bears like to do this, where they jam it down and flush out a lot of longs, and then you get the automatic sort of retrace here to rescue trapped longs. So patience, I think what I was going to say before was like patience is a virtue when it comes to this stuff, but you also have to be quick to enter and exit. So you got to be good with patterns. You got to, what I used to do for years, I had a chart up on the wall, well, series of charts, super nerd, but I used to have a whole bunch of charts on the wall, and I would look at it every day, and I'd be like, oh, I see that one, like I recognize that pattern now, that kind of thing. So, anyways, this is like a potential reversal, but now that we've gotten a little bit higher and we saw that, it kind of like invalidates the last connection point. So I'm kind of thinking that we'll do some measurements because now it looks like we're on the top end of a triangle, which is usually a continuation pattern. So we have seen, typically you will see, if there's a triangle, you will see these rejections at 0.786. So can everybody see that, by the way? Is this clear enough? Zoomed in enough? So one more note on patience before I talk about the 786. So for when you come up on like these reversal points or potential reversal points, typically you will always I'd say like 90% of the time you will see a retrace at least 50% of what happened. So if you're stuck in a position, let's say you went in a little heavy by accident, it happens to all of us. If you go in there a little heavy, you can still get out. So if you were taken by surprise, let's say you went to go grab a cup of coffee and didn't set a stop, it happens to all of us. But you would be able to exit right now in profit. So we talked about entry, at least like a small bit right here, and then add some up here, and then we kind of talked about taking profit right here, but that was really fast when they sold it down. So right now is your second opportunity to take profit, and you should be in profit, whether it's $100 or $1,000 or whatever. That would be a successful trade. I mean, again, you could leave a runner if you'd like, but now that this is kind of looking like a triangle here, I would say that take that loot and scoot if you got longs. Did anybody actually take that trade? As I was talking through it, I don't know if I would have. But you did, Jake? Actually making money? Yeah. Did you have weak hands, Jake? I don't know. Just sell out. No, honestly, guys, like if you have big position size, like this candle will scare the shit out of you. And you could be down a couple $1,000 in like 3 seconds, and that's the part that's terrifying. But guys, position size. So there's also other ways to day trade where like you don't have to have like serious leverage. So hold on, let's kind of watch and see what happens here, because they're retracing a lot, but you can kind of see that the sellers are trying to defend this area. So assuming that they don't really make a new high, again, I wanted to repeat again, this is your second opportunity to exit if you didn't do that before. And if you're still leaving a runner, then this is your last, or not last, but this is another opportunity to close that runner. So you think about it like, you gradually scale in, you gradually scale out. And, if things keep exceeding your levels that you've drawn, well, then you just have to kind of roll with the punches. So now that it's kind of busted up higher, the triangle still isn't invalidated. It just might be expanding a little bit. So for example, this 0.886 level is a very, in my opinion, it's a very strong reversal level. So I would say 50%, 0.618 and 0.886 are very common reversal areas. So now what we would want to look for here, now that we've tapped this level in this very short-term fib range, let me tighten that up. Now that we've tapped that level, you want to look at like what the potential is here for like a reversal, or if it does end up continuing. Just one thing real quick. There's an alternate scenario other than this triangle I was going to talk about. Sometimes, again, I draw these measurements all the time. So I kind of think you actually might see maybe an extension higher. So you might see something kind of like this, and that kind of changes your shape a little bit. but that level here, sorry, usually these like big kind of pronounced candles are usually like, they're usually like the midpoint, I guess you could say, of like an ABC. So let's kind of just keep an eye on it. I still probably wouldn't take the trade just because the risk reward is probably not the best, but it still does look like it's bullish and doesn't look like the sellers are gonna care too much about them ripping it a little bit higher. But one of the reasons why I also want to share this is because now that we've got a little bit more price action to read, now I want to try to measure this out. Remember what I was saying about 0.786 with triangles and things like that? Well, notice how we have this extension here up to, and I think this is actually probably more likely than not. Well, sorry, I know I'm like, this is why you got to pivot fast if things are going the other way. Like we're just talking about a potential bear setup in the close with triangles and stuff, which I will talk about. But what you could see is like a extension up here, and if you zoom out a little bit, I mean, it kind of makes sense because you could see, let's say it has a little higher, and then you see something like this, and then overnight it gives it just some time to consolidate, and you've got yourself a longer or a wider triangle. So we might just be like in the very middle of the triangle of the distribution and accumulation zone. So yeah, okay, you're starting to see some more more selling at these levels. Okay, so now let's focus on the bearish path. So yeah, like I said before, is like, I wouldn't have taken that long trade. The risk reward setup like probably only gives you a couple points, but I mean that could be nice. But if you're doing something like 0 DTEs and you're already down big on that now, if you were long. One thing to notice here that just popped in is that there's a lot of volume here on this candle. So yeah, so definitely the bulls trying to get their money back. So anyways, like I think you'll find here that the volume starts to pick up at the end of the day, and you really kind of want to be out of any trades before the last like 10 minutes, because the last 10 minutes is very crazy like that. And just a lot of volatility, like again, if you have positions of size, it's going to be a big problem. But okay, so let's do the one last thing about this bullish pattern, or this potential bullish break. Usually you see ABCs that terminate at A equals 0.786 C or A equals C. So like it's like 100% extension. Typically in consolidation zones, I see pivots at 0.786 if you're looking at ABCs. I never see them at 618. Like, think about symmetry. Typically you see expansion or contraction. You know what I mean? Typically you find that in consolidation zones, like, it just looks like a sandwich of no volatility, but yet there's still a lot of price moving underneath the surface here. So anyways, you could see that, and if we do end up seeing price get to this level, I would consider that probably a spot to short. I'll explain that in a minute, but let's not do that right now. Let's finish up this triangle thing. All right, so the 786, how I determine this is usually it's the first leg. You know how I always say the first leg down is always the most difficult forecast. Well, once you've got that first leg, and then you've got a pivot up here, you want to see which fib level is defended, with strength. So you can see here that this candle had a lot of volume to it, early on in the day, and that's where you got this pierce of the 786, and that's really a test to see, like how much conviction sellers have to keep price pinned to a certain level, and they've done a good job of doing that all day. But usually, what the bulls will do is they'll try to keep pushing, and it's up to the bears to shut it down. So now, as I'm kind of talking about this, you can see big volume here, and yeah, it just looks to me like buyers are trying to test. They're just trying to test sellers again, because they they've probably been accumulating all day. And they want to drive up prices so they can make money, of course. But anyways, keep your eye on it because we might actually get this 29,520 level. But anyways, like how I typically draw these things is like this zone right here, this 786 and 886 level. That's really, it looks like it's going to be invalidated anyways. But this is going to be, I guess, new high invalidates a triangle, and then you go back to the ABC setup. And you might actually be able to, squeeze some long trade profit out of this. But that's if they make a new high, and they haven't made a new high yet. So I guess technically this triangle theory is still valid, but it's getting a little long. Longer. You know what I mean. So there's another name for this too. If it does stop here and it does reject, then this becomes a barrier triangle. Now, a barrier triangle typically breaks upward, or breaks to whatever level is pretty much like the level of resistance. So right around here, these are a barrier triangle, or this is looking like a barrier triangle, which means if this does hold, you'll see something kind of like this. And then likely you'll probably see this to finish that up. So we're just going to kind of park that over there, just for reference. And let's kind of see what our volume is doing here. So typically you'll see these big volume stabs, and that's really to just test, buyer or seller conviction and activity. All right, so back to this triangle thing. How did I come up with the 0.786? I keep like delaying that. Usually the first leg, crap, I just deleted it. Usually the first leg will give us our peak to trough starting point. So you see how I kind of drew that fib right there. Well, it kind of climbed up pretty fast here, and then the seller stopped it once it pierced that 786 level. Now that would be kind of like a good short. I would say, just because you've got this, man, yeah, look at that, nice. High five for crayon drawings. See how we were just talking about if it makes a new high, then the triangle is invalidated. But sometimes these guys let them get it as, suck in as many people as they can, and then dump it. And then also too, it's getting a little bit more crazy because it's power hour. So when you're looking at these these triangles here, what you can reasonably assume is you will have some sort of at least 50% retrace. So that was that first one that happened today. That was right here. So I mean, you're not going to you're not always going to tap that fib level exactly, and that's key to understand. If you get pretty close, that's good enough. Take your profits, enter your trade, because typically, 50% is going to be like anytime you have like a dip like this. It doesn't matter if it's a new low or whatever. You're always going to see traders try to get out of their prior positions that they took. So this is a decent sell right away in the morning, and then you get you kind of see what's happening here. And actually, this is a good opportunity to show you something else here. So as we see this volume coming in, you're probably going to want to know if you're trapped up here. Like let's say you took a long, it's going to break out, but it didn't, so you shouldn't have entered. but if you're getting crushed here right now, you're looking for this part. You're looking for the B wave in order for you to either cost average, or you know what I mean, just essentially exit. So you want to try to gauge this. So let's go to QQQ. So this is called volume footprint. Okay, this is what I mentioned the other day. So volume footprint is really nice because it shows you like if you're like your net buys, your net sells, and this is actually a little bit easier to read. You can kind of see the volume profile here. It's definitely bearish, but once you kind of zoom out a little bit, you got. I'll explain these boxes in a minute, but once you get these, you got kind of this whole range in play here. Yeah, okay, they're not kidding around here. So, but what you're looking for is a buyer imbalance in order to stop the slide. So what you're watching them do right now is you're watching them try to try to match whatever number of shares or contracts or whatever the ticker is, trying to match that, and then they're trying to obviously do a positive balance so they can drive price up. And really, it's just to recover trap positions. I think that's really like half of trading. It's just being able to understand where pivots materialize. And so for example, like they're trying to bounce it right now. You can kind of see with these positive lots of contracts. But if you flip to the chart, we already kind of knew just with this pattern in general, you typically see about 5 connection points within a triangle. So we're looking for this retracement. So let's draw a fib. And like I said before, you typically see a 50% retracement, if not more. So you can kind of see here that, all right, bulls are interested in bouncing this to recover positions. We have to see, whether it's got some legs. So it does. So that's good. So if you're in your trap position, what you would typically do or typically look for is it depends on where you were trapped. So if you were trapped somewhere along here, what I would typically do is set like a just a limit order to close at break even. And you never know. Like I'd say half the time you get lucky and it just closes out even. But you still have to understand the bias of the day. So each day kind of has a theme. Like today's theme is bearish. Same thing with yesterday. But other days are very clearly bullish. So right now, I guess really what we're looking for is we want to make sure that like I wouldn't you don't want to increase position size at this particular moment. It's more about like adding a hedge. So if you think about it like this, okay, if you are day trading, let's say you're doing futures, the hedge I'm talking about here. So let's say you're long front month contract, you want to sell the back month contract. Well, what sucks about that is that these guys, there's a very, very large spread on the back month contract. But if you have a large futures position, it's worth the expense or the peace of mind. I typically never want to be in futures after close anyways, just because there's a lot of moves that can happen overnight. But when it comes to like end of day patterns like this, when things are starting to heat up, you really want to keep an eye on. Well, one, I probably wouldn't be trading at this point in time, just because unless you had longer term puts or like longer term put debit spreads, because it really does seem like they want to push it lower into close here. I'm kind of thinking what you might see is probably not a new low. And this is just like gut feeling here, guys. So just because we're getting close to the end of day, I want to make sure I can kind of cover like the thought process here. I do want to focus on like pivot points, but first pivot point is potentially 0.618. So I guess like at this point, like if you were trapped long, you would want to have a hedge. This didn't retrace up to 50%, which means that sellers have conviction, and it's not necessarily like a normal like gentleman's game of back and forth. So it looks like sellers are on mission. So you want to kind of ride that wave. I kind of think usually you get at the end of the day you get like 10-minute intervals where you'll get like it's either seller dominated or buyer dominated. They're trying to catch the knife here, but likely you'll probably see them at this 0.618 level try to bounce it, and you might see something like this, and then going into close, probably something along those lines, which we did kind of draw already. So now that we kind of kept that off to the side, so let's really keep an eye on this 0.618, and now you kind of see what that looks like. So now you're probably thinking to yourself, okay, so now I'm trapped in my positions. You have a couple options. You could increase your long position size while also having a hedge, or you could just let it ride with no stops or anything like that. And I'd say the probability of you being able to get out of that position by end of day is it's not like really high, but there's a good enough chance that you could see something like this again up to 50% and then back down. There's still a lot of time left, 17 minutes here. But I guess like what I would do in this situation is I would wait excuse me, I would wait till we get to 0.618 and see what happens. I wouldn't increase long position size, but I would definitely have a hedge, so I'm delta neutral, because you still make money on the hedge. So the plan here is if you have the hedge, then if it keeps ripping down like this, let's say it goes all the way down, and let's say it makes a small little new low, that is where I would close the hedge right there. Well, I want to make sure I know what line this is, so I'm not giving bad. Another thing to see here is there's a lot of top wicks, so you can see the sellers dominate that. Okay, so you saw a decent amount of buying here, 0.618. So that I don't think is all she wrote for this current pattern. I still think you'll probably get something a little bit more symmetrical as it develops. But again, like I still wouldn't. I would just stay delta neutral if trapped. If you got stopped out and you don't have any positions, well, now what you're looking for is potentially like a swing trade. So I think about day trading as like you don't always have to make trades that open and close during the day. In fact, you will overtrade yourself to death if you do that. There's usually only about 2 or 3 trades a day that I take, if I do take any of those trades. And some days there's maybe only 1 trade that's a setup, and that's usually like after everything's calmed down in the morning. So let's say you're feeling bold, okay, and you think it's gonna be bought right here, and you're gonna see something like this. It's possible. This is definitely a good reversal point. But let's check and see what our contracts are doing, or our volume footprint. So we're still we're still seeing this imbalance here, and it certainly looks like the sellers want to push it down even more. And typically, when you see something like this where the level is pierced, and then you don't get a strong response from buyers, they're going to push it down even more. So, the different scenarios I would still stay hedged if you're trapped long, and then plan on closing that hedge like down here, like we talked about before. And then usually you will get some sort of bounce overnight or something like that. And then in the morning, you can usually exit your trap long position. Sometimes if you get good news or something like that, sometimes you could wake up to a nice hefty pile of money. But so to kind of recap here, we kind of followed this up all the way here, and we identified that there was no new high, so it's probably going to stay a consolidation pattern like a triangle. Then they kind of sold it down pretty fast here, which I don't want to say it happens like it happens super fast like that in the middle of the day. So if you're going to try to practice some day trade stuff, do it in the middle of the day where there's less volatility. So now let's try to figure out where this is going to go and bounce. Typically, when you do that, you kind of see like the first major zone like this. And now that it got down to the next fib level here, this 0.786. Now let's see what it does here. So it's continuing to decline. So that tells me that they're still aiming for probably a lower low today, or sorry, like a lower. I call it a local low. Let's also take a look at this higher level pattern here, because we might get some more information here just by trying to chart this out. Well, this is still trying to find bottom. And by the way, like with swing trades and stuff, I typically have I always have like some longer term put spreads open, so you can always capitalize on moves like these. Like you don't have to enter and be afraid that like, oh man, did I miss the entry? Like, that's all been making money as you've been looking at the stuff all day, just because it's been bearish. And typically what I like to do is I like to close out my shorts at end of day, or like at a day like this, I guess I would say. So if you picked up a short, maybe you cashed out here in the morning, and maybe you took a long and potentially got trapped. Well, I mean that happens, but with these consolidation patterns, I think you're a lot more likely to be able to exit, either long or short, especially if you zoom out here and you look at this dotted line. It's called the point of control. Even if price gyrates and we get this kind of thing, you should still have one or two more opportunities to exit either long or short. So again, I wouldn't worry so much about having like having a long or short that you might need to leave open for a day or two. But it's dangerous if you have futures. Not so dangerous if you have like debit spreads. So for those of you who don't know what like options debit spreads are, it's like let's do a call, for example. If you look at QQQ, let's say you bought a 715 call, let's say for 2 weeks from now, and then you sold a let's say you sold a 717 call. So I actually had this trade earlier today. All you're doing is within 2 weeks, you just need the price to be higher than this, or sorry, you need the price to be higher than 717, and if you hold it till expiration, then that's max profit. And every day that options contract, or the one that you bought and the one that you sold, it cancels out your theta risk. So really, what I like to do is I like to try to target like the lower parts of the range and then the higher parts of the range, especially for consolidating. So something like this, where like at the end of the day today, I'm probably going to take out some like call spreads, but probably definitely not short term. I would say if because there was a risk here that the that sellers are going to continue to push it down this week. But if you have let's say 2 weeks, like I do have a call debit spread trapped kind of up right around like the 720 area, but I'm not too worried about it, because even if you see something like this tonight and tomorrow, to make some sort of like ending pattern like that, you should still see some sort of larger retracement here. I'm sorry, the crayon drawing, hopefully it helps, but you should still see some sort of larger retracement within maybe on Friday, something like that. But realistically, all you're trying to do today is really just not make an expensive mistake. So now that we know that, okay, we got a new low, so now we're looking for a good spot to buy, or I should say, we're looking for a good spot to buy like some like call spreads, or some shares, something like that. Like you could buy some like TQQQ, or whatever you wanted to do. Really, you're just trying to figure out like what's a good spot to enter and or exit. So in this case, hold on, let me go back to this. In this case, we see. Let me measure this. So on the 5-minute time scale, oops, I was wrong. See, this is kind of what I mean. You might have like a little bit of a gap here, but it gets pretty close to these common reversal points. So let's do this. Okay, here we go. So you can see here that bulls are, in the last 9 minutes here, they're really going to try to keep them from making a lower low. Personally, I think this looks like a pretty solid bull flag here on the larger time frame. Before, remember how we started out the call, and we were talking about. Hold on a second. Yeah, here we go. Okay, I just want to make sure I got my time frame right. Remember how we kind of started the call, and I was showing something kind of like this, and then making like a triangle out of it. So if you zoom out, we still have that like that diamond kind of pattern that I showed you before, but now it's becoming a little bit more clear that we might see something like a inverse head and shoulders. So this is really what you're looking for if you want to enter in for like a long position. It looks like the sellers aren't going to give up here. You can tell by the volume. You're not really seeing like a lot of enthusiastic, buy ups like you would with something like this. So at the end of the day here, it typically, like I said, every day kind of has a theme. So today's theme is just consolidation and selling. Not necessarily about like pushing price, very far. I think it's just, a series of things. So you are going to see the bulls buy it up here, and it's possible, you've seen some crazy closes where you see something like this. They just do it really fast, which is why, again, I'm like, I hate trading the last 10, 20 minutes of the day, unless you're pretty sure, which can be your downfall too. But if you're pretty sure that you'll see, so it looks like, yeah, we are going to get a little bit of a bounce, but this is one that, if you were feeling bold and courageous, you could short it into close, but that's really, really tight for a time frame, and that's kind of a reckless trade. But if you're a riverboat gambler, that's for you. You could do that, but it's something that you still want to give yourself enough time. I always say, you could have the right trade, wrong time, or you just don't give yourself enough time. I'm not looking at anybody in particular. All I'm saying is that it's that is one thing I can say, and it's not advice. It's just comes with the territory. Okay, it's give yourself enough time for these trades to play out. Patience usually plays out more often than not. I'd say 90% of the time, if you hold and you give it a day or 2 days, you'll find that your trades actually work out pretty well. And also one more thing here about end of day. Typically, when it comes to the timing aspect of it, the last 10 minutes, algos always go nuts. What we know so far is we've got this 0.618 level here that's been pierced, or not pierced, but we've got a little bit of support here. I don't think it's going to last. I think you got about 1 more minute here if you're in a long trade. Yeah, okay, so it kind of looks like they're going to do this. So now we just kind of wait. So wait for the clock to change until it's 5 minutes left, and then you'll probably see sellers step in and push it down. But again, this is one where I probably wouldn't take a trade, just because, yes, it does. Yeah, there we go. Yeah, sellers. Yeah. Okay. Jake, did you take that reckless riverboat gambler trade? Good for you.
No, I'm out. I'm done.
Good
today.
Good man. Okay.
Yeah. After you stop, I don't know if whenever you stop this, I want to show you what I would do.
Sure.
And get your thoughts on it.
Yeah, no problem. And really what I wanted to do today was I wanted to give you guys just kind of like a thought process, because I know there's going to be people that watch this recording. And I wanted to kind of show like the thought process of, as the price is moving, like what are you looking at as like potential pivot points? And a lot of this I understand is, a lot of it is just experience, staring at these charts all day, every day. I don't know if I told you guys, but trading, you said I spent 330 days online. So I had my charts open 330 days for last year. That's terrible. But anyways, so you can still see here that, it still has that downward bias. And if you have this 1 second chart kind of thing, like it really does give you some good direction on like what that conviction is with buyers and sellers. Now this isn't, this is the highest plan, I guess, on TradingView, but it's not cheap, but it's also not too expensive. If you have like one good trade, it could potentially pay for your subscription. But so typically what you see, usually it's 5 minutes of one side does their thing, then the last 5 minutes the other side does theirs. And if it's been a day where there's been a lot of buying into the selling, so I wouldn't say this is like a heavy buy into the sell kind of day, but I still think that downward targets can be something like this, and they may not push it all the way down at close. Typically, what you can see is when you get futures, you've got this. Okay, so this. Let me copy this over so you guys can see. So this range here, usually you get like 0.3%. Yeah, there you go. Hey, not bad for guesstimate. Usually you get this kind of range here for futures because typically they want to give themselves a buffer. If futures open and they really try to juice it by doing a lot of like market on open orders, you can get some gaps. But what those guys will do is they'll put like iceberg orders, top and bottom here if they're trying to control the buying or the selling. So in this particular case, I think what you'll see is like maybe just some more of this crap for an hour or two, and then when the European and Asian market, or when the Asian market opens, you can typically see more activity. But for now, I think they'll probably just, I still think you'll have a lower low overnight or something like that, or maybe in the morning, but you should still see some consolidation here, and then probably a move higher. And the reason behind that is really just because it just looks like, that looks like the bat signal. It's typically a bullish thing. So now that the day is kind of coming to a close here, you might see something cool where they really want to hit a target. And like I was saying before, on like very heavy volume days, if they haven't hit their targets, like they're selling targets to take profit on, let's say like 0 DTE options or something like that, they'll push it down like right away, so that you can see something like just a huge candle to hit a price, and then you can see it get bought up right away. And that's typically like the bottom. And another thing I'll tell you about day trades is it's also really good to get familiar with like the different, like what typically happens to price in different different time intervals. So time intervals, I mean like 1 minute, 5 minutes, that kind of thing. Like 5 minutes is not the appropriate amount of granulation, I guess, with time when you're trading. You really got to get these minute charts, and if you can, anything sub-minute to gauge momentum. Like an RSI is not going to show you this. An oscillator is not going to show you this. Those are more macro. So when you're looking at an RSI, like typically, this is my chart over here where I typically do like hourly. But typically, if I'm going to day trade, I know like what the larger pattern is, and I typically look for it because it usually materializes, but sometimes not. So I guess to kind of like wrap up here, because I know that the hours come to a close. In the close, you can see wacky things, of course, like target hitting or whatever. But when it comes to just day trading in general, I try to avoid the first 30 minutes to an hour of the market unless it's really obvious. Like if there's a news event or something like that, and market just starts ripping, then yeah, just jump in. You can always put a hedge on. But this is where what I'm looking for is really like pivot points. So we already covered like the 0.618 pivot, 0.786 if you're looking at like a sideways consolidation zone. 0.886 is usually pretty reliable. Anything beyond 0.886, you're probably going to look. I would say it's probably a move that's going to continue in that direction. So like up here, when we're talking about this triangle up here, and you remember how they keep kind of drawing the lines like up and up and up. Well, that happens sometimes, and some people dismiss it as like, oh, it's just chart voodoo, just drawing lines on a chart. Well, not really, because it works, and you guys can see it works. Like we didn't make a new high, and experience tells us that highly likely it's going to be a barrier triangle, or it's going to continue to sell. And recently, what I've seen is these guys will take it within a tick or two of making a new high, and then they'll sell it down. So it's to kind of try to grab all the liquidity they can before they sell, or sell it at the highest price possible, without triggering other algos to buy. So really, what they're doing is it's algorithms competing against themselves, or against other algorithms. All right, so the pivot point here held for now, but still with a with like a day trade. You probably could have taken the long, but now it kind of looks more like you'll just see another retracement, and then potentially that lower low to make like an ending pattern, and then you should see some sort of increase there. So you can kind of see here at the end of the day that you've got some buy delta down here, but it's not a ton. So I guess like I would go long now, but like for the next day, not necessarily for like right now. If that, I don't know how do I say that better. I would add some like long debit spreads for like QQQ, but I would do like 2 weeks or something, and if it jumps up 5 points or 10 or whatever tomorrow, great. That position, if you took out like five of those contracts, and maybe it's like $1,000 a risk, you might make $300 on it, or $350, depending on how high the move went. And that's nice because you don't have to worry about theta. But if it takes another day or two, you at least had the right idea. But the timing is always what'll get you if you have leveraged instruments. So the biggest complaint people have with options is theta burn. So if price doesn't do anything for a couple of days, then your positions deteriorate rapidly, especially if the VIX heads down like this. But there's a whole bunch of other topics and things you could cover with day trades. I hope this was helpful. I guess to kind of reinforce the point, like zoom out first, look at what your day is doing, kind of look at the overall patterns. Check your favorite gurus charts in the morning, and try to read the commentary and understand the commentary. Also, some days are more prone to news volatility than others, but on a regular quiet day, typically your pivot points are going to be within your fib drawings. I always find I'm always amazed at how accurate these things can be. And you don't necessarily need to have experience with wave analysis, but I would highly recommend, I would highly recommend checking out some books on it, or at least doing some quick reading. Ask ChatGPT or something. These ABC drawings. It's really in combination now with technical analysis. So wave theory and stuff has kind of been smashed together with that. But as always, nothing is a guarantee. So just before you say that, you can have all the fancy tools in the world, but if you get a motivated buyer or motivated seller, your patterns and your analysis can be invalidated quickly. And it's very, very important to understand what those levels are. And typically it's if you make a higher high or a lower low, then that usually means the pattern that you're currently looking at is probably not done forming. But you can always kind of sketch out the patterns and try to move it as you go. All right, I guess I'll wrap it there. Hopefully I was able to cover, I don't know, I guess what I would like is that, people who are watching the video after hours here, I'm gonna, stop here in a second, and then Jake, we can answer your question. But the one thing I would like is if you guys could give me some feedback on what was confusing, or, what I got to spend more time on. I have some notes and stuff, the things I wanted to cover, but when the things are moving and you're talking it through, it's I can't watch myself as I'm doing it. So I want to make sure I'm being helpful for you guys. So anyways, yeah, let me know, send me DM, do it in discussion, something like that. Just let me know what I did good on and what I base planted on, and I'd be happy to do some more sessions. Yeah, and also too, I will save this as a recording. We also got the webinar here in about 2 hours. So, all right, I'll stop this recording. Thanks for watching, guys.